Very excited to be presenting at StockCharts ChartCon coming up next week. So I'm not going to be doing a new show next week, but this should be a lot of fun. I see the people presenting. It looks like a really good group. I'm going to handle a technology sector review, and then I'm also going to be in a bull bear debate. So check it out at stockcharts.com/ChartCon. Let's go ahead and get started with the show. This is Joe Rabil with Rabil Stock Research, and I've been providing technical stock research to institutional money managers for the past 30 years. For the past year or so, I have started to provide that research to individual investors. So what I wanted to do today, I get so many questions about ADX constantly, especially through my other YouTube channel, Invest Like a Pro. I just get a lot of questions about it. And so I wanted to try and simplify it a little bit. So I'm going to do a quick lesson on this and maybe just give you some basics that I think are really important. There's a lot of information out there on YouTube on ADX, and I question a lot of it. I've seen some of the guys on YouTube that are kind of providing what they call, an ADX lesson and everything. I think you got to be really careful about the information that you're getting out there. So I want to just give you some basics to look for. So I'm calling this ADX Simplified. I think if someone hasn't or is just trying to learn ADX, I think this will be very helpful. But for someone who has been using ADX, this might give it in a slightly different context that could be useful. So I want to look at how to understand what the DI lines are telling us, what the ADX line is telling us, and the importance of the 25 line. Then we're going to go through the individual stock requests that came through. So let's go ahead and get into this. And what I've got is a chart of the S&P. Now, I'm going to tell you flat out, I don't think the indexes are as good of a way to use ADX, frankly. But this particular weekly chart of the S&P is giving me a lot of different things that I can talk about that I think are really what I wanted to get to during this lesson. So what I've done is listed some things that I think are very important. And first thing is that the plus DI is representing the condition of the buyers. The minus DI is representing the condition of the sellers. So what does that mean? That means this plus DI, which is the green line on my chart, is telling us how strong or how weak the buyers are. All right, it's giving us a sense of as a stock is moving up, do they still have an interest in buying that stock? It's pretty important information. The red line is telling us the strength or weakness of the sellers. And on my chart, again, it's the red line, which is minus DI. Now, that's telling us that, let's say if a stock's doing the same thing and it's rising, do the sellers, are people thinking this is a good spot to be a seller? Okay. And we can do the same thing as it's going down. If a stock is dropping and the red DI line is not continuing to go up, that's telling us that the sellers are saying, you know what, it's getting too overdone to the downside. Now, I'm going to give you some examples as we go through, but I'm trying to break this down to a pretty simple level. And it's the green line is telling us as a stock is moving and moving in a specific direction, are we getting confirmation from the buyers? Are we getting confirmation from the sellers? They are two independent groups. You've got people who hold a stock that are holding a stock and are trying to determine when to sell. And then you have another group of investors that are not in the stock and they're trying to determine, should I still buy this even though it's made a move to the upside? It's very important criteria and I think incredibly important to understand. Now, the blue line is the ADX line. That's the line that most people look at when they talk about ADX. And really what that's telling us is the difference between the green and the red. Okay, it's the difference between the two. So as the lines are separating, the blue line is going to go up. All right. Now, if you notice, the green is on top and moving up and the red is going down here, but they're separating. So the blue line goes up. Now, if you look at this, red is going up, green is going down, but it doesn't matter. It's non-directional. The blue line is going to go up either way. So in this case, the blue line is going up based on the buyers, and on this move, the blue line is going up based on the sellers. Same thing here, going up based on the sellers. Here it's going up based on the buyers. And right now it's going up and has been strong based on the sellers. So as we work through this, so that's kind of the first three things. So the key thing to keep in mind is whichever DI line is on top. So in this spot right here where I've got the arrow, green is on top and it's above the red. But where it's really strong is when it can hold above 25. And I would consider anywhere, 23 to 25, in that zone. This is pretty strong, the fact that this is holding. And if you notice, it held. And then it started to break here, but then got back above. And then we had a clear kind of drop, but it didn't crisscross with the red. So the sellers didn't take over. We just lost a little strength in the buyers, but then it got right back up and then continued to make new highs and new lows until we formed like a climax pattern, pretty hard sell-off. The blue line got way overdone, well above 50. So as long as the green in this case is above 25 and making, basically staying above 25, staying above the red and making higher highs, or at least holding 25, then you have to consider that to be on top. Now, the key thing I wanted to point out here is that green stays in control until red can do the exact opposite. Red has to take over, hold 25, so it crosses above green and then holds 25 and turns up, and then it takes over until green can do the same, right? So green takes over back here where price is making higher highs and higher lows, and green takes over again now, and that's in control through this whole period until we get to this point where red breaks above, holds 25, and now from this period on, the sellers have been in command. So a couple key things I want to point out. And I'm just going to just look at this spot right here where first of all, there's lag to this indicator when there's a lot of volatility. You can see the bottom took place and then reversed, and it took a long time for green to take over. So you have to understand that about this indicator. It will have lag when there's massive volatility. But what I wanted to show is that the buyers were really good up until right about this point because they kept on making peaks. The blue line was making peaks above 25. Green was doing pretty well, getting moves above 25. And then it just started to fail here. Green and blue stayed below as we approached this leg right here. This was the major warning sign that we had gone through a really strong phase in the market, and this was a big, big warning sign. Now, what followed was volatility. You see how red moved up and then came down, and then green moved up and then came down? I mean, up until this point right here, we have a situation where we have the best time to be long and trail a stop. And that's when green is above, ADX is making new peaks with price and holding and making peaks above 25 up until right about this point. We had a situation where you could be long. There wasn't a significant amount of volatility. You can see that in the price action. Really wasn't that volatile, similar to this period here where it moved up and it was making nice orderly pullbacks to the 18, not a lot of size to the bars, right? So when we get that, that's really the period where you can buy a stock and hold on. Strong ADX, low volatility. The worst time to be long and trail a stock has really been since that time. Look at the volatility based on the ADX. Look at all this movement. There's just massive swings taking place. You can see the blue line going up and going down. You can see red making jagged movements, green making jagged movements. It's very tough. Even through the short side is very tough most of the time because you get big swings against you when you're shorting. So the trend is down now, but it's very tough to like get short and stay short using a stop method, like a trailing stop method, because the volatility is big. So that's what I would consider to be strong trend strength, but high volatility. Still hard to hold on. The worst condition is a low ADX condition with high volatility. And we got to be careful about trying to play trends when the trend strength is low, but we definitely have to be really careful when the volatility is high at the same time. So these are a few basic things. So a couple of rules of thumb is when we have a long period of low ADX, then we're storing energy for a move. So we had this move going sideways here, okay? And ADX stays low and all three lines are below 25 for an extended period. And we have a pattern going sideways. That is a bullish setup, and it's set up for a nice move to the upside. Now, you could argue that this was similar to that, but the problem was we weren't going sideways. We were actually trending to the upside while this is not moving higher. This is totally different. This is like an exhaustion pattern because it was moving up and the ADX was not confirming. This was a low ADX breakout out of a sideways consolidation pattern. Much, much different. This is bullish. This is bearish. Okay. So, and then the only thing I want to tell you is when ADX is strong and making peaks above 25, you can buy pullbacks towards the moving average lines that are rising as a buying opportunity. Those are the two ways that I really like to use this indicator. Buy out of a low ADX condition where price has been moving sideways, and then buy pullbacks when the trend has been strong. So that's my recommendation on how to use this. Hopefully this simplified a few things for you in terms of the way people use this indicator. Let's go ahead and get into the stocks now. Just briefly, my services can be found at Rabil.com. The individual package provides about 2 to 3 reports each week plus a special video. So if you're interested in trying it, you can do the coupon code StockTalk and get the first 2 months for $50 for now. That is going to change sometime in the next month or two. I am definitely going to shift that because I'm creating a new product, educational product. So I'm going to change my trial. So anyway, give it a shot. You can take a look at Rabil.com. Let's go ahead and get into the stocks now. I'm going to start out with the S&P first. And I want to look at it a little bit differently. I've been talking about last week, I mentioned briefly how we failed at the 18-month and now that line is declining. And we're below an 18-week and that line is declining. And we're below a declining 18-day. But I want to give different evidence because I do believe that the moving averages confirm price. It's not the other way around. So I do want you to look at it from a price standpoint first, always. When I'm using the moving averages, I'm always using price first. So one of the things I love about this StockCharts software is the zigzag. So I'm going to click on one of these. Let's just show you. The percent is at 5. I use an auto percentage checked on. I use a multiplier of 2. By default, it's 2.5. I do use the high and low. I have that checked, and then I use it from the close. All right. Now, the reason why I'm bringing that up is because I have the exact same indicator on the 60-minute as I do on the monthly chart. Because it's set to auto, it understands that it's reflecting the changes in each time frame correctly. So it's really not set to 5%. It's set to adjust based on the price action in each time frame. I love that part of it. I had a software program that I had to program in those characteristics, and this does it for me automatically. So let's just look at this on a monthly chart. We're still in an uptrend. When you look at the trend line, right? This is the last low before the peak. We go back to the last bottom and draw on a trend line without passing through prices. And we are in an uptrend, but we've got a lot of room. Okay. Now, if we look at it on a weekly chart, there's a couple things going on. We broke this little mini downtrend here. because we made a lower low, we can draw this downtrend line in. Now we know we have a important trend line that's been touched 3 times up here. But for me, I'm looking at a 1, 2, 3. If this is going to break here, and now we've tested, for this to turn up, it has to go up and take out this high. In so doing, it's going to have to break this downtrend line. It's also going to have to get back through 4,000, which I mentioned last week, I think is an incredibly important level. So until we get through 4,000, it's hard to get too excited, really, when I look at a longer term time frame. We really can't do anything until we get through this downtrend line. And then officially for me, we only get unconfirmed evidence of a trend change by turning back up through here, because that's going to be a 3, and that's only unconfirmed or presumptive. We're going to have to make another higher low and another higher high to truly shift this trend back to the upside. But those are the levels I'd watch for. If we look at the daily chart, we made a lower high and a lower low. I mean, in order to switch this back to the upside, we're going to need to move up and break this downtrend line and then turn things back to the upside in that way. It's just pretty far. Now, the good news is that we're oversold and we've got room to the 18. We've got room to the trend line. I mean, the possibility is that we could rally here. So we're just kind of on the lookout to see how this reacts at this prior low. It's trying to rally, but it's really, S&P is down almost 2% this morning. So the other thing I'd mention is we have strong ADX on the weekly chart. We have strong ADX on the daily. Notice how this is rising. This ADX line is still rising. And red confirmed the last decline. So we don't have any evidence of a switch here. Now, let me just take a minute and show you what's going on the hourly. We have to break this downtrend line. We broke the downtrend line and now we're testing. In order to see signs of improvement on this time frame is we have to come back through here, but then I think you have to make another higher high and another higher low, because this is all going to take place below the 18-day. We did the same thing here. We broke the trend line, tested, and then crossed back above this high, but we didn't confirm it by making another higher high and another higher low. The other thing we didn't do is get confirmation. We got DI improvement, but we never got the ADX to cross above 25 based on the green. When this crossed above, it was the sellers taking over again. So we're going to need to see something like that. It's going to take some time. I would just keep watching these things. I think the zigzag does a really good job if you're keeping track of the 1, 2, 3. Definitely something to use on this service. Okay, let's look at JP Morgan. So JP Morgan broke the downtrend line, is now testing. In order to improve things, it's going to need to get back above this level. But that's going to take, if it happens quickly, it's going to happen below the 18 months. So we know it's suspect. When that happens, I'm always looking for another higher high and another higher low to confirm. All right. So yes, this could show some signs of improvement if it gets back above 120, 125, something like that. But it doesn't really look like that's imminent. So be careful here. Now, look at this one. This is a little bit different. We broke the downtrend line and now we're testing, but we need to get back through 200. To turn things around as a 1, 2, 3. If that happens, we're going to be getting back above the 18-month line, this 18-month line most likely, and that'll show improvement pretty quickly if it happens, but that's a long way away. You see how far? So we do have some room between here and here if you're a trader to potentially make money, but you got to be careful if you're looking at it from a longer term standpoint below 200. Now, CRWD, the difference with this is we have a trend line here. It hasn't been broken, but it's been more sideways than down. So if this does break the downtrend line, it's going to come back up through this 18-month all in one fell swoop. And this is going to look a lot better, much more quickly than something like Moderna or JP Morgan could. So I think this is a stock to keep on a watch list. If this crosses up through 200, could be really interesting. Okay, WSP Global on the Toronto. So one of the patterns I really don't like even though this is still in an uptrend, do you see how this is walking along the 18-month line here? And these lines are going in the opposite direction. It makes me question this move. I know it's stayed above. It's been a strong stock. It's held up really well. But I want to see a better test of these lows, and then maybe if it can come back up from there, I might be interested. But I'm always questioning when we're walking along the 18 and the MACD's going the opposite direction. I think there's risk of another retest. So be careful on that. Starbucks has shown a lot of strength. Look at the relative performance recently. Pretty impressive. But we're back to a declining 18-month line, which is the same line here. This is a little bit of a split when you look at it on a monthly and a weekly, because on the monthly chart, we've come back to the 0 line on the MACD, and we're showing reverse divergence. But in this time frame, we've rallied all the way back up to the 0 line, and we look like we've got a decent amount of resistance up here. Now, the one positive I'll say here is on the short term is that we have a little bit of a 0 line reversal and a reverse divergence forming. So that could cause this to rally a little bit more. But I'm sort of questioning whether this can get back above, say, 91, 92. I think it's probably more like a trading range rally rather than something that's going to be explosive. There's no real sign of improvement on a DI basis yet. So be really careful here. And if we re-break the 18-week, then look for this to come back and test this 75 area. Airbnb. So I think this is interesting. I mean, if you want to play this off the daily on the short side, I know the guy who brought this up is looking at this as a short. Okay, so we've got a pinch play after crossing to the downside on the daily. This is a pinch because this is rallying up and this is pinching in towards the signal line, and we have DI confirmation, red DI cross back above. So I like that. What I don't like is this rally and the way this is consolidated and the fact that it's all taking place above 100. All right, so that makes me a little leery because these lines are going up while this was trying to kind of correct back, hugging and kind of trading around the 18. So I'm questioning this price action around 100. Now, I think you could do that. If you play this off the hourly, using the daily, trigger in off the hourly, you could play this for a quick trade, and then you're just going to have to watch and see how this reacts at 100 if you want to play it that way. ASAN, I think, is caught in a range here. So we look like we've bottomed. We started to base here, working sideways. We made a move up, pulled back, move up, pull back. So, I mean, it looks to me like there's decent support around 20, but I don't think anything happens here until we get through 30. All right. And I wouldn't be jumping the gun on a stock like this because a lot of these software companies look like they could base for a while. Got to be real careful in these right now. I wouldn't be jumping the gun on anything unless I want to trade between 20 and 30. That's about all I would do. CCJ is a little awkward in the way this is played out. We've been moving higher, but the last two moves, so we made a higher high here, and then we rallied up again and tested this high, but ADX is just not very strong here. I'm looking at this as a trading range between 20 and 30, same as the prior one, really. I mean, there's pretty good support underneath, pretty good resistance above. I would look to trade it if I want to do that, but only trade right now. I'm not convinced that this is ready to break out. So Schwab is intriguing. There's a couple of things going on here. Number one, it's holding up like a champ, okay, relatively speaking. The other thing is that it's hugging the 18-month. I mean, we've got a lot of stocks that have failed at the 18-month and have turned down and made a new low even. The fact that this is hanging in here is pretty good. The other thing is the 18-week has cupped around. Now, we've got a couple issues because the 0 line is right above on the weekly and we don't show any signs of strength yet. Here's the thing that intrigues me. You see how this is kind of walking sideways here, and we've got a 0 line reversal and it's a reverse divergence. So I would be willing to look at this as this crosses above this line here because it's going to be getting back above the 18-month line. And I think there could be a trading play, not a big move, but something that you could, especially if the market does try and stabilize here. I'm not sure if that's going to happen, but if we do, we could make a little bit of a trade in this stock because there is going to be some room and not that much resistance. Constellation software. So let's go back and look at it from a trend line standpoint. You see how, in fact, let me do it on this chart here because I want to show you something. So we made a lower low, and then we made a lower high, and then we made another lower low, and now we've made another lower high. We have the trend turned down. The trend is officially turned to the downside. So in order to reverse a trend that's turned to the downside, we need a full-fledged shift in trend. That means we have to break the trend line, make a higher low, and turn back up. I mean, we need evidence, at least something like that. So don't be too aggressive on this. I know that this is holding up like a champ. Now, one thing I would tell you is because the relative strength is so good and because this is a pretty important trend line, you could evaluate the break of the trend line as a way of entering, and maybe on a smaller size. Like you could start a position and then look for more evidence to add the position after we get more evidence. That would be a way that I would consider playing this if this survives. Remember, if this turns back up, it's going to be back above the 18-month line. It's going to be back above the major trend line. It's going to have a new high in relative performance most likely. So those are all pretty important. But don't jump the gun here because this could spend a lot of time trading in this range between 1,800 and 2,200. All right. DXCM, another potential short. The problem with this one is this 18 is flat. All right. So yeah, we've got a potential trade looking at it on a daily chart, but I'm not sure that I'm all that excited about this one because it's made too much of a move and flatten the 18 week. So again, if you're going to do this, you got to be really nimble using the hourly chart. I wouldn't jump the gun or look for any kind of a big move to the downside here. Thanks for watching the show. I will be out next week at ChartCon, so no new show next week. So hold those symbols until the following week, or you can send them in, but I just won't get to them until the following week. But go ahead and send them to StockTalk at StockCharts.com. Have a great week, and we'll see you next time.